There are a lot more households dealing with financial stress these days, according to the Reserve Bank's latest financial stability report. For instance, let's consider the number of owner-occupiers on variable rate home loans whose essential expenses are higher than what they earn. Now that's jumped from 1 to 5% in just over a year. And when you factor in private health insurance and private school fees, which some people think are essential, that number surges to 13%. But if the RBA were to lift interest rates again, that's a lot more people facing extreme mortgage stress, and the risk of recession would shoot up. However, this doom and gloom scenario is very unlikely to happen, at this stage anyway. Now, speaking of gloom, the number of company insolvencies has risen back to pre-pandemic levels, with residential construction firms in particular seeing a big spike. But apart from all that, the Reserve Bank says our financial system is doing just fine, and most of us, but not all, should be able to cope with any economic shocks coming up. Elsewhere, the local share market finished slightly higher, up by 0.4%, driven mainly by mining and financial stocks. And it's been a pretty rough time for markets lately. The ASX 200 dropped 1.3% this week, and it's down by a steep 3.6% since this time last month. In currencies, the Aussie dollar is steady at 63.7 US cents, while oil prices slumped by another 2% today, on top of yesterday's 5.5% plunge on concerns about weaker demand. And overseas, Hong Kong stock markets posted big gains, while US and Japanese markets were flat. And that's finance.